Hello traders, and welcome to another video. This is RALLYTOP Investing. Now in this video I want to show to you a simple forex secret that has helped me tremendously in my trading experience. Now let me introduce myself to you. I was a super losing trader. When I mean super losing, I mean super losing trader. Alright? Until one day, my eyes opened to this forex secret. And ever since then, my trading journey has never been the same again. Let me tell you guys, if you can spend some time to study and master this simple forex secret, your trading journey or your trading experience will become an explosive event. You will stop losing your hard-earned money to the markets. And what is this simple forex secret? It is structure and price. Structure plus price equals money. Let me tell you, regardless of the strategy you use, if you do not have a proper understanding of market structure, your strategy will not work for you. This is the naked truth. Alright? How do you really read structure correctly? Very simple, guys. Very simple. There is no point for us to make simple things complicated. There is no point. Alright? Very simple. Now I'm going to show you the simple way, or the simplest way, for you to read your structure correctly in the market. Once you are able to get your structure right, then all other confluences will fall into shape. Alright, so let's get started. Now take a look at this diagram. Price has printed a low here and went up and printed a lower high, and then came down to violate this low and then push up to break structure high here. Alright, now that is a first sign that price has intention to go higher. Alright, it is not a confirmation that price is going higher, but it has a strong intention that price is likely to go higher. Alright, now when we are talking about bullish structure, of course it's basic knowledge that it is higher highs and higher lows. And when we are talking about bearish structure, we are simply talking about lower lows and lower high. It's basic knowledge, of course. Alright, now as price breaks every structure, what you need to do is you need to put a horizontal line on your swing high. How to determine the correct swing high is a topic for another day. Alright, you need to know your swing highs and swing lows if you must read structure correctly in the market. Alright, now once price breaks a particular structure and forms a new higher high in the case of a bullish structure, now your duty is to mark that swing high with an horizontal line and that swing low with an horizontal line. As you can see, this is our low, alright, and this is our higher high because it's higher than this high. Very simple. Alright, now you put your horizontal line on your swing high, put your horizontal line on your swing low. Alright, now your duty is not to know what price does in between. Your duty is to wait to see if price breaks this structure high here to the upside. If it breaks and closes to the upside, alright, then you know the uptrend, alright, is still in place. But if price for whatever reason comes down to break this structure low here to the downside and breaks and closes below it, then it might be time for you to start looking for sell opportunities. But it has to meet your trading plan. All right, you don't just see price breaking below the low and now you just enter the trade thinking it's going bearish, because it can simply be a liquidity grab and price will go up. After grabbing liquidity, price will go up to break the structure high here and continue higher. All right, so your duty as a trader is to wait for your swing high and your swing low to see what price will do. Now, as you can see, after price printed this high, it moved down, and formed this complex pullback. This is known as complex pullback. All right, and before you know it, price rallied up to break this structure, the most previous structure high, to form a higher high. Can you see that? Now, once it has formed a new swing high, you move your horizontal line to that new high. Here is where we are now. You move your horizontal line from here to this new high. That's why I placed this line here. All right, now you now begin to trace your higher low in the case of a bullish structure such as this. All right, now your higher low, your valid higher low, must be the low that produced the leg that formed the higher high and that broke the previous swing high. Do you understand what I mean? Your low, your valid low, must be the low that has the strength to push price higher, to break this previous low and form a new higher high. I mean, to break this previous high and form a new higher high. All right, now I want you to also understand, before we go further, that after every break of structure, I'm coming back to that, but let me show you the structure first. All right, we'll come to price. I want to show you structure first. Remember, we say structure plus price equals money, isn't it? Now I'm showing you the structure first, how to read your structure correctly, then later we'll come to price. All right, now price now again from this higher high, and you put your horizontal line there. Now, where is your higher low? This is your higher low, because this is the low that has the power to push price up, to break this previous structure high here, to form a new higher high. All right, now price pull back again. All right, now if you don't understand, let us assume that this one is our H4. Let's say this is our H4. All right, this is our H4. Let's just assume that this is H4, this H4 time frame. All right, now this is your higher time frame, isn't it? Let's just assume that this is H4. Sorry guys, let's just assume that this is H4. This is H4 time frame. Please take note of that. This is your H4 time frame. All right, now price pull back here after forming this swing high. It pull back to this point. Now take a look at the price action in between this high and this low here. Take a look at the price action. Now price started breaking the lows and maintaining the highs, broke the low again, maintain the high. Now for those of you who go straight to your lower time frame like the M15, M5, M1 to pick your trades from there, you would have, and ignoring your higher time frame, you would have concluded that price is going bearish, and so you will wait for double break of structure. All right, and you jump into the market, and before you know it, market turns against you. All right, why is it? Because you have refused, or you have ignored what your higher time frame, which is the H4 in this instance, what your higher time frame is doing, you ignored it. All right, if you had marked your swing high and your swing low, you will know that this seemingly downtrend, this seemingly breaking of structures to the downside and maintaining the highs, is just a retracement. All right, a retracement to your higher time frame point of interest in order to help your H4 to go higher. Do you understand that? Simple as that. Now again, it went higher, broke structure and formed this higher high. All right, now where is the low? Where is your higher low that gave rise to this high? It is this low here. All right, can you see that? Simple as that. Once price forms a new swing high, mark that swing high with an horizontal line. When now you will trace your swing low in the case of an uptrend. If it is in the case of a downtrend, which we are going into right now, you will mark when price breaks the swing low, you will place a horizontal line there and place horizontal line at your swing high. All right, now as you can see, price now came down instead of going up to break this structure here to the upside. Look at what price did here. This should immediately tell you that price, this is a shift in structure. Can you see this shift here in structure? This is a shift in structure. All right, that should show you that that is a shift in structure. Okay, so now price came down. Remember, this is your last significant higher low. Remember that this low is your most significant, is the most current significant higher low, because it is this low that gave rise to this higher high. Can you see that? Now this low is crucial because your trading range is between this low and this high. Can you see? This is your low and this is your high. So if price breaks below this low, it could be time for you to start looking for sell opportunities, provided it meets your trading methodology. All right, now price came down and broke that low, as you can see, to form a new lower low. All right, why is it a lower low? Because it's lower than this other low here. Can you see that? Leaving an OB. Now I'm not going to talk about OB just yet. I'm just on structure. I've told you after structure we come to price. Now price went up again, price retraced and then came down again to break the structure low here to form a new lower low. All right, and from there it broke structure again. All right, so this is the way you follow price. You will always want to move your horizontal line to the swing highs and swing lows in the market, so that you'll be able to follow price accurately. All right, this is the simplest method for you to be able to know your trend. All right, now let's go to price. Now, as you know, or as you may have known, after every break of structure there is going to be a point of interest. Why is it? Because the smart money likes to buy in order to sell, or sell in order to buy. Do you understand what I'm saying? Now take a look at this. The first thing you need to ask yourself after the break of structure, after each break of structure, ask yourself immediately, where is the money? Or where is smart money? Not the money. Where is smart money in drawdown? Where is smart money in drawdown? Now in this case, look at this sell candle here before this buy candle. The smart money sold here, and before you know it, they bought. The smart money likes to edge the market. They buy and sell at the same time. They sell and buy at the same time. That is their stock in trade. Now when they sold here with this bearish candle, this small bearish candle, they now push price up. After that, while they are going up, they are in huge loss. That is why we call it smart money drawdown. They are in huge loss. Do you understand that, guys? Now they will have to find a way to come back to close their sell orders here in order for them to be able to push price to their intended direction. Do you understand that, guys? And so they started coming down here. Look at it. They make this complex pullback to come down to mitigate out of this sell before you buy candle. Can you see? So price came there and mitigated out of this their sell position. This is where smart money is in drawdown. Now price push up to break structure again. Remember, once it breaks structure, the first question you should ask yourself, where is smart money in drawdown? Now here is where they are in drawdown. In this case, this is sell to buy candle again. Now take a look. They will have to come back, all right, to close their sell position here in order to be able to move higher the way they wanted to go before. All right, now price has broken structure again here, Now your OB will be sitting somewhere here. For instance, let's assume your OB is sitting here and you also enter the trade. You want to enter your trade here. Now if you use risk entry, all right, you would have taken a loss here, all right, because price broke through your point of interest. But one good thing about smart money concept is that smart money concept gives you the leverage that even if you enter trade 10 times and you have a losing streak 5 times out of 10 times, you still come out profitable. Even if you have a losing streak like 7 times and you only win 3 times out of 10 trades, you will still come out profitable. Why is it? Now take example here. Now let us assume that you entered a trade here and you made 1 to 5. You know, in smart money concept, your minimum risk to reward will be 1 to 5. I do not go for anything less than 1 to 5. Do you understand? That's the minimum. Now let us assume you entered the trade here and you made 1 to 5, and you entered the second one and you made 1 to 5. That means that you have made 10 out here, 10%. You have made 10% profit here, and now here you have lost 1%. Now if you take out 1% from 10%, you still have 9% as your profit for this very particular pair. Can you see that, guys? That's the beauty of smart money. All right, now when price broke this structure here to the downside, can you see? Now where is smart money in drawdown? This is where they are in drawdown. Buy to sell candle. This is where they are in drawdown. So you mark that one out as your OB and you wait, because certainly smart money at some point in time will bring price back up there to close their buy position in order to be able to move to the intended direction. All right, and the same thing here. Price broke structure here, all right, and the same scenario happened. Beloved, I mean guys, this is just the simple and straightforward secret that the grandmasters of this game have been using for years. All right, if it will cost you to give a lot of your time to master it, to studying and mastering your structure in the market, it is worth the time. It's worth the time. I want to let you know. Now let me go quickly to the chart and show you. Now take a look. We have this break of structure here. All right, that's our break of structure, and we have another break of structure here. Can you see that? We have another break of structure there. Now I've told you, after a break of structure, mark your swing high and your swing low. All right, now this is your swing high. Can you see your swing high here? This is your swing high. All right, and here is your swing low. Very simple concept, very simple concept. All right, you don't need to have trend lines on your chart. You don't need to have all these indicators on your chart. Simple and straightforward methodology. All right, this is your swing high, this is your swing low. Now what did I say? The first question you should ask, where is smart money in drawdown? Now here is where smart money is in drawdown. Look at it here. This is where they're bought to sell. This is where they are in drawdown here. Now that becomes your order blocks, your order block. All right, that becomes your order block. So you mark it out. You mark it out. That's your order block, guys. Can you see that? That's your order block. All right, that's your order block. All right, now as you can see, smart money brought price up to close this their buy position here before they push price down. That's the first example. Now price break structure again here. Take a look. It's a break of structure again here. All right, here is another break of structure. All right, now where is the high and where is the low? This is the high, guys. This is the high. Remember, there is a minor break of structure here. You call it intraday structure break, intraday structure, yes, but it is break of structure nonetheless. Now this is the high that gave rise to this low that broke structure. All right, so this becomes your swing high. This becomes your swing high. All right, very simple method, very simple way of analyzing your trend. That's your high, and this is your low here. That's your high and that's your low. Let me okay, no, it's still not straight. I want to be sure it's very straight. So that's your high and that's your low. What's the question you need to ask after the break of structure and you have identified your high and low? Where is smart money in drawdown? Now look at where smart money is in drawdown. This buy to sell candle is before the break of this minor structure. All right, so this is your OB, buy to sell candle. It's your OB. Can you see that? That's your OB, guys. And as you can see, price returned to the OB perfectly and drop. All right, now there is another break of structure here. This is the last example I'm going to show to you. There is this break of structure here again. Take a look. Here is a break of structure. All right, that's a break of structure. Where is the high of this break of structure? Now this is the high of that break of structure. Let's remove this OB now. We are through with it. Now this is the high that gave rise to this low. All right, that broke structure. All right, so you mark out your high. Mark out your high. Mark out this your high. Sorry, this low. I'm coming, guys. Just a moment. Sorry, let's remove this low first so that we don't make a mistake. Let's take it out. All right, so now price has broken structure here. All right, this is your high. All right, and this is your low. All right, so this is your swing high and this is your swing low. This is your swing high, this is your swing low now. All right, this is your swing low, and where is your swing high? I'm not drawing these lines correctly. Sorry, guys. Let me give you a perfect drawing. Excuse my drawing, I'm very poor in drawing. All right, so this is okay. Let's just leave it at that. That's your low, that's your swing low, and here is your swing high. All right, here is your swing high. Can you see that, guys? Now where is smart money? This high gave rise to this low. Where is smart money in drawdown? Where is smart money in drawdown? The smart money is in drawdown here. Buy to sell. All right, buy to sell. So you put, this is your OB here, buy to sell. Buy to sell. Don't forget that. That's your OB, buy to sell. And as you can see, price came back and dropped. All right, guys, this is the way you map your structure. Easy and straightforward. With price, structure plus price equals money. All right, please go back test. Don't take my word for it. Just go back and back test. Become a master of marking your charts. Please take time to practice and mark up your charts, and then you will see the magic in trading with structure plus price. All right, we have come to the end of the video today. If you have any questions or opinions, please drop it in the comment section below. All right, and if you are new here, please consider subscribing right away and hit the notification bell so that anytime we produce a new video, you'll be notified about it. And if you have not joined our free Telegram group, please do so just immediately, because very soon we are going to have another session of masterclass, free masterclass. So please join our Telegram just right now. I'm going to be looking to be taking record of those who join our Telegram now and subscribe to our YouTube channel. If you don't subscribe to those two channels, you will not be qualified for our free master class. All right, so please do that right away. I will leave the link in the description below. Have a wonderful day, guys.